Undoubtedly, the dominant narrative for numerous publicly traded brokerages in 2023 revolved around the commission lawsuits. However, moving into 2024, experts in the industry are shifting their attention predominantly towards mortgage rates. The lawsuit saga doesn't seem to significantly influence transaction volumes or home buying trends, commented Ryan Tomasello from KBW. Currently, there's a broad spectrum of possible directions the lawsuit narrative might take in the coming year. But in my view, the trio of key elements shaping market mood and decisions next year will encompass supply, demand, and mortgage rates. As mortgage rates have been on a decline lately and projections indicate a further decrease in 2024, there's a cautious sense of optimism among analysts regarding the performance of publicly traded brokerages in the upcoming year. The market seems poised for a notable uptick next year, driven largely by significant cost-cutting initiatives and brokerages streamlining their operations. This could lead to a chance for enhanced profit margins coupled with robust revenue growth, observed John Campbell from Stephens. Yet, this positive perspective isn't universally held. And if you're finding this discussion enlightening, don't forget to subscribe to our channel for more insightful videos like this, ensuring you stay well informed in the world of finance. Any reduction in home prices, transaction numbers, or commission rates can contract the revenue possibilities for everyone. This might challenge some businesses in maintaining or even achieving profitability, given the inherent fixed costs in real estate, particularly if home sales stay low and commission rates decline, stated Anthony Paolone, a senior real estate analyst at JP Morgan. Many firms have already implemented significant cost-saving measures to safeguard profits or lessen losses. This approach is common across the board, but eventually, a stronger revenue model becomes essential. Analysts acknowledge that discussions around agent commissions and commission lawsuits might exert downward pressure on commission rates, but they don't foresee an immediate impact. The verdict's immediate effect on the business is unlikely, commented Soham Bansal, an analyst at BTIG. Over time, however, I anticipate increased commission pressures on the buying side. Bansal also pointed out that lower commission rates could be offset if agents and their companies increase their transaction volumes. Nonetheless, reduced commissions could further strain the already tight margins of brokerages. Reducing buyer-side commissions would impact the total commission pool, negatively affecting large publicly traded firms. This would be similar to a drop in overall transaction volumes, which we know adversely impacts margins and profits, Paolone explained. That's always been a major concern. Moreover, analysts speculate that the housing market's sharp downturn over the past year and a half, coupled with the commission lawsuits, might drive less productive or casual agents out of the industry. This could enable top-performing agents, who usually receive a larger share of the commission, to capture more market share, thereby putting additional strain on a company's margins. Top agents generally command a higher commission cut. However, if there's pressure on buying side commissions, agents are likely to demand a bigger slice from their brokers, Bansal added. If commission pressure persists, I see agents wanting a larger share of the commission in the future, and brokers will need to compensate more to retain their agents, which could adversely affect their profit and loss statements. While Tomasello acknowledges this scenario as a potential outcome, he views it as a development likely to unfold over several years, rather than something immediately impacting 2024. Our current estimation is that shifts in the commission structure might emerge more prominently in the latter half of the year, with tangible effects likely appearing in 2025, commented Tomasello. Despite the anticipation of these shifts affecting the entire industry, some analysts foresee certain entities performing relatively better. Reflecting on the verdict, it seems clear that the more skilled agents will navigate these changes more effectively. Evaluating different firms, Compass stands out immediately due to the high productivity levels of their agents, Bansal noted. Douglas Elliman, too, seems well positioned, especially in the luxury segment, which is less likely to be impacted by the verdict. The settlement agreements attained by Anywhere and Re-MAX in the Morrill, Sitzer, Burnett, and Nozilik commission lawsuits, which have been preliminarily approved, are also seen as potentially beneficial for these companies. It's reassuring that the financial repercussions are manageable and absorbable. However, the potential outcomes of broader lawsuits or actions by the Department of Justice remain a concern for the entire industry, Paolone explained. Despite RE/MAX's reliance on agent count, a recent area of challenge, Paulone remains optimistic about the company's prospects. At this juncture, it seems the industry will face pressures, but RE/MAX's strong franchise model and support for highly productive agents should help them maintain stability, counterbalancing the industry's pressures, he added. With the accumulation of similar commission lawsuits and ongoing concerns about mortgage rates and inventory, 2024 is shaping up to be a challenging year for brokerages. However, analysts anticipate a more favorable scenario compared to 2023. The key difference compared to last year is the avoidance of a continuous downturn in transaction volumes. This stability might allow firms to find their footing and adapt to the evolving environment without the panic of rapidly declining numbers, Tomasello concluded. As we wrap up our discussion on the evolving landscape of mortgage trends and their impact on brokerages, it's clear that the real estate industry is poised for significant changes in the coming year. The interplay between market pressures, commission structures, and brokerage strategies will undoubtedly shape the future of real estate investments and the broader financial market. For those of you keen on delving deeper into this dynamic sector, understanding the broader housing market becomes essential. If you're curious about what lies ahead for homeowners, investors, and the real estate market as a whole, our next video, 2024 Housing Market Predictions, is the perfect next step. It offers a comprehensive view of the upcoming trends, challenges, and opportunities in the housing market, which are closely intertwined with the shifts in mortgage rates and brokerage dynamics we've just explored. So, if you're looking to stay ahead in the real estate game and want a thorough insight into what 2024 holds for the housing market, make sure to click on the video appearing on your screen now. Discover what the future may hold for homeowners and investors alike, and stay informed with our detailed analysis and predictions.